Hello and welcome to World of Business, your weekly update into trending news and latest developments on the stock markets. It's also on this show we herald unsung but thriving business entrepreneurs. My name is Tafaranda Guta. Now, from the 23rd to the 24th of July 2026, the Harare International Conference Center will host the inaugural Zimbabwe Industrialization Conference and Expo, also known as the ZICE 2026, now organized by the Ministry of Industry and Commerce in partnership with Africa Economic Development Strategies, AEDS, and Zimtrade. This premier market-driven platform is set to target over 1,000 industry leaders and 500 exhibitors, and we're going to dissect what this means for our economy with Professor Gift Mugano, who is a well-renowned economic expert. But first, we give you the exchange rates as they are of today. The Zimbabwe gold to the United States dollar interbank rate was at 26.80 ZiG. The Zimbabwe gold to the Great Britain pound interbank rate was at 35.48 ZiG. The Zimbabwe gold to the euro interbank rate was at 30.62 ZiG. The Zimbabwe gold to the South African rand interbank rate was at 0.61 ZiG. The Zimbabwe gold to the Botswana pula interbank rate was at 1.98 ZiG. We also give you the commodity prices as they are on the global market. Gold per ounce traded at $4,080 after it went down by 1.66 percentage points. Silver per ounce traded at $61.53 after it went down by 1.57 percentage points. Copper per pound traded at $617.40 after it went down by 0.61 percentage points. Platinum per ounce traded at $1,637 after it went down by 1.02 percentage points. And that's it for the first segment. Do stay tuned. We've got more to unpack on World of Business, exclusive to ZBC. Welcome back to the second segment of World of Business, and I'm now joined by the expert in business economics, Professor Gift Mugano. How are you, sir, and welcome to the show.
It's my pleasure. How are you doing?
I'm all right. Now we're just going to jump straight into the business of the day. Now, Professor, let's start with the big picture. In your own understanding, what has motivated the government of Zimbabwe through the Ministry of Industry and Commerce and its partners to hold this grand inaugural event?
No, thank you very much. My understanding, working with the government, particularly the Ministry of Industry and Commerce, is that government has took a decision to drive the agenda of economic transformation as enunciated in the National Development Strategy 2. You might be aware that in terms of exports, 92% of total exports are raw materials. And that is about 70% minerals and 22% agriculture related. The share of manufactured exports is 6%, right? That leaves 2% for services. So government just finalized the development of Zimbabwe National Industrial Development Policy 2. And of course, the local strategy, which is also running between 2026 to 2035. The industrial policy is running to 2030, aligning with NDS 2 and the Vision 2030. So the inaugural and the subsequent meetings of the ZICE are clearly to create a platform to have a conversation which are interrupted, evidence-based, to inform the industrial policy and to review the industrial policy and to create a platform for conversation around how can we have a transformation from the export which are dominated by raw materials to manufactured goods. In that, Ministry of Industry and Commerce has set $1 billion as exports in manufactured goods, just up from around $300–400 million on an annual basis. So this becomes now to 1 billion.
That's more than 300%.
Correct.
Yes,
yes, correct. Yeah, so that is the motivation. But the other point I want to raise is very important, is that Traditionally, we have sector-specific conferences. That is the Zimbabwe Agricultural Show.
Oh, yes.
We have Mine Intra, Mine Indaba, but we don't have a conference on industrialization. We have even some other sectors like services, education, which is called scholastic.
Yes.
We also have ICT conferences, we have construction conferences, but at the engine, at the center of what makes up an economy when it comes to economic transformation is industry.
Yes.
So this is a timely decision by government, and we are excited to be supporting them in this direction.
Now, the inaugural Zimbabwe Industrialization Conference and Expo comes at a time when industrialization is high on the national economic agenda. Now, from a macroeconomic perspective, how critical is industrialization to achieving sustainable economic growth and structural transformation?
I like those two keywords, sustainable industrial growth and also
Structural transformation.
Structural transformation. We need to move away from raw material denominated exports. So we need to value add. And you have seen that the government, led by the President, Comrade Idi Mnangagwa, they are very emphatic about the issue of value addition and beneficiation.
Hence the ban on the export of raw minerals.
Exactly.
Put into place recently.
So you now need the value chains to work. Mining value chain, agricultural value chain, this is industrialization. But also what is very critical is that we're talking about sustainable growth. Right now, our minerals, the major driver for our mineral export or total export is gold.
Yes.
Which constitutes 49% actually, of total exports. Total exports is gold. And what is driving that is because of the gold prices which are up there.
Yes.
And you know, naturally, gold price should be settling around $1,800 per ounce. But right now, we are just above 4,000. You've just announced it.
$4,080.
And $80, yeah.
Yes.
It used to be 5,000, right?
Yes.
So if gold price crashes to the normal, this is a boom, commodity boom. It means also our exports will crash down. Because almost 50% of our exports is what? Is gold, right?
That's a big number.
Yeah, that's a big number. So we are talking about $9 billion of exports, and half of it is what? Is gold. And that's, so we are riding on the commodity boom. So we now need to build on that and have other industries emerging, so we don't then have a crash.
I was about to get, the economic boom is not sustainable.
It's not.
At some point, it's going to go down.
It's not, yeah.
And
Particularly when there's correction of those prices of gold.
Okay.
Yeah.
All right. Now, Zimbabwe continues to pursue value addition and beneficiation, like you were saying, across key sectors such as mining. How can industrialization strengthen domestic value chains and improve the country's export competitiveness?
Well, that's wonderful. So, you know, the industry is, it creates a market. It's the anger.
Yes.
The anger of all sectors. So when you look at agriculture, right, the market for the agriculture sector is the manufacturing sector. And I can give you the numbers that 70% of the raw materials which goes into manufacturing comes from agriculture. So if there was no industry, there's no agriculture.
Yes, that's true.
Now we have a mining, but we don't have a booming manufacturing sector for the mining sector. So it remains extractive.
Yes.
So for us to have a dynamic and sustainable growth and prosperity for all, we need to have a working industry. So industry works as a market. Even the banking sector works very well.
Yes.
Because at the center of the farmer and the miner is manufacturing. So even in terms of value chain financing, it works very well when you have a booming manufacturing sector.
That's true.
Or even industry. I would want to call industry because it includes manufacturing and commerce.
Yeah. Yes. True.
Yeah.
All right. Now, the conference brings together policymakers, investors, financiers, manufacturers, and technology providers. How important are such multi-stakeholder platforms in catalyzing industrial investments and fostering public-private sector collaboration?
No, thanks so much. So this is an ecosystem which matters for industrials. It's a system.
Okay.
And when you look at even the structure of the program, it looks at all these actors. They cover thematic areas which are covered on the two-day program. Manufacturers, value addition and beneficiation, financing, access to markets, issue of technology. And these are critical builders or pillars which are critical for industrialization. And if you are in one house, in one room, and you're having conversation on how to drive the agenda of industrialization when the whole ecosystem is there. It makes it much easier for government to come up with practical and evidence-based resolutions which will help us to take ourselves forward to 2030.
Now, speaking of evidence-based, I'm curious, do these conferences actually yield tangible results on the ground? In as much as they are there to bring together policymakers and multi-stakeholders, are they producing tangible results for the economy of Zimbabwe and for the betterment of the Zimbabwean people?
Correct. So what is very important is that first you need to understand that any policy has to come out of a consultation and and dialogue. So these platforms, this one and other platforms which I've participated, they create a platform for conversation and where government then taps in to the views of the market and inform policy. When we started, we said, why is government going for the conference on industrialization? And we said the reason is to create a platform for conversation to inform the industrial policy. In this particular instance, these platforms are going to be the barometer or a dashboard for reviewing industrial policy and for modifying the industrial policy and for coming up with other sector-specific policy strategies which are going to be supporting the industrial policy. So clearly, but also over and above, there's exhibition where SMEs are going to come to party with big companies, and we hope there will be market linkages which could be taking place. And also going to create a matchmaking symposium where big companies can then link with what? Small players and create a market for themselves.
You just touched on something that we were discussing earlier before the show started.
Correct.
Are SMEs going to benefit from this expo, or is it just for the big players?
So
considering SMEs literally create a big number or the bigger support of the economy.
Correct.
Yes.
No, thanks so much. That's a very good point. So in my view, directly we have exhibitions which are discounted, targeting more than 300 companies from SME sector.
Okay.
And these are discounted.
All right.
And then, of course, because we have a framework of matchmaking, right? So we need to link market linkages program, big players and large companies. So the SMEs comes out of that market with orders and the networks of whom they can supply. But you are aware that even big companies like Delta Beverages, Delta Corporation, Varun Beverages, you can National Foods, Unisco Group, they are coming to exhibit, right? So they are also going to have a platform where they are going to raise issues affecting them, which will help them to continue to grow. And if they grow, who are the major drivers of sales for Delta, Dairy Board, the National Foods, are SMEs.
That's actually true, the tax shops. And
tax shops, yeah. So it's good for them as well.
All right, you heard that from the professor. Now we're going to take a short break. We're going to be right back after this. Don't go nowhere. It's World of Business, exclusive to ZBC. Welcome back to the last segment of World of Business. We're still continuing with the exciting discussion, and the professor is still here in the studio with us. Now, Prof, we're going to just jump straight into the business again. Now, looking at Zimbabwe's current industrial landscape, where do you see the most attractive opportunities for investments, localization, and import substitution?
Oh, wonderful. That's an interesting question. I always talk about our import bill of 4.5 billion US dollars. Which we are importing, which can be substituted. Rather, that's half of our total import.
Yes.
So half of it can be substituted. What is it? Fertilizers, right? We are spending $337 million on importing fertilizers on an annual basis. Pharmaceuticals, right? $300 million. So those two commodities is over $600 million.
That's a lot.
Tissue and paper. Tissue and paper, guess how much? $200 million. Every year.
We are importing.
We are importing tissue and paper, right? And I can go on to talk about cereals, over $500 million, which we are importing, right? So
are these not products we can create on our
that's
own?
why I'm excited by your question to say, where are the opportunities
Yes.
to substitute?
Yes.
This is not
And these are SME players' roles that we are talking about.
yes, yes. This is a mixture of the SMEs, right? Because when you think of these are agro-based commodities,
Yes.
and even our farmers in it, right? Right. So the list is endless. Iron and steel, for example, $300 million. Yes, we have Dinson Iron and Steel Company,
I was about
but
to
they've not
mention.
moved to the stage of fabrication, and
Oh, okay.
they're still producing. The range of the steel is still limited.
Oh, okay.
Right.
Okay.
So the point I'm submitting is that we have the beauty about our conference is that we have it has preceded by a state of industry study which we have carried out as Africa Economic Development Strategies,
All right.
which looks at these areas of interventions. Over and above, we've developed bankable investment projects, which are going to present to the conference to say, we are importing tissue and paper. What is required to invest in this area? So the idea and the whole agenda is to come up with a way forward to say, how do we eliminate these imports drastically? We cannot be a country which is importing these commodities.
That's true.
And what is very refreshing is that the whole system of government is working together. Minister of Agriculture and the Minister of Industry and Commerce, they are working in unison to eliminate, because some of them are agriculture related. So as far as I'm concerned, the commodities are under $4.5 billion. Your tissue and paper, your chewing gum, your Pampers must be eliminated, and this present demand. You are importing because there's demand.
That's true.
We don't import where there's no demand.
Yes.
And what we are importing, it means there's a market.
A
So
strong
the
market.
and we should now use this opportunity to then localize it as a country.
That's
Yes,
very true.
yeah.
Now, we're going to look at access to patient capital, modern technology, and efficient infrastructure, which remains a challenge for many industries. What policy and market interventions are necessary to enhance industrial productivity and competitiveness?
No, wonderful. So there's one area which I think we have not put extra attention on in Zimbabwe. I like the underlining word of patient capital.
Yes.
Our pensions funds, as part of their being prescribed asset status, in my view, they should play a critical role in funding industrialization. So you are NASA of this world. And
Yes.
apparently we have a topic which we want NASA to talk about.
All right.
To say they receive a pension fund, and how can that pension fund be used to finance industrialization?
Oh, okay.
And many times I'm a bit worried about the direction of funding by banks and even other financial institutions towards accommodation. Because in my priority, in the schemes of things,
Yes.
I rather want to see money being directed first to industry. So when you think of accommodation, when you hear about mortgages, they are given patient capital for us to go and sleep, right? But we should give this similar condition which goes to mortgages to industry for us to create jobs. And once we create jobs, people can then build their own houses.
Yes, that's
and
true.
then we can sleep.
Ah.
So you hear what I'm saying?
Yes,
So
yes, yes.
we need to recalibrate this. But I want to end by saying, Minister of Industry and Commerce has got what we call Industrial Development Fund, which is very critical in retooling. They started with $100 million as ZIG. It's a good start.
Yes.
But my submission has been always that the Industrial Development Corporation, which manages these funds, should be turned into a development finance institution and not have it as a competing organization in manufacturing of commodities.
That's true.
If you look at the model of Industrial Development Corporation of South Africa, it's a development finance institution. It's not an enterprise which is into manufacturing. So we need to change that so that we have that arm of government playing critical role of providing patient capital.
That's
And even the pension funds can be directed through that as a scheme to finance industrialization.
Now, as Zimbabwe seeks to deepen regional and continental trade integration through the AfCFTA, how can industrialization position local firms to capture new market opportunities?
So that's an interesting one. In SADC, for example, there is an agenda on regional value chains.
Yes.
And you can only go into the regional value chain when you are manufacturing. Right. So we need to link with those regional frameworks, and South Africa is doing pretty well in that area. And so, for example, if you look at areas where we have competitive advantage, food and beverages, pharmaceuticals. We have scope. We have over 1,000 or so various types of drugs. And Zimbabwe is actually very competitive in Africa, number 2 after South Africa in pharmaceuticals. So we have what it takes to produce for the continent.
We've got the capacity.
We have capacity. We just want to industrialize, raise capacity, raise production, raise competitiveness, address ease of doing business, so for us to penetrate this big market with $3.4 trillion value. But what is very critical, what Mexico has done, is that when they signed the NAFTA, North America Free Trade Agreement,
yes,
right, they went to Germany and said, we have a market, big market here, come and invest. So they were driving industrialization. So the Germans went into America and Canada through Mexico. So that's what we should do as Zimbabweans. We are at the center of SADC. We can be a gateway to Africa, continental free trade area. We now need to industrialize, bring in investors, which is the essence of this platform which we are going to be having with the Minister of Industry and Commerce, and then get into Africa through our geographical position which we have as a country and the powerful human capital.
That's an ambitious plan, but I feel it's achievable.
It is indeed. Where there's will, there's a way.
That's true. Now, beyond increased production, what multiplier effects can a robust industrial sector have on employment creation, SME development, export earnings, and economic diversification?
So I think it will get us to 1995, 1996, when our industry was working, where we were exporting 35 or so diversified products, which are manufactured, right? But because of ESAP, we deindustrialized.
Yes.
And we have informal sector. Then, of course, what continues, again, the economic challenges we have in the last 3 decades. But we are correcting that. So we now need to retrace where we were, because we were there before, where we're exporting diversified commodities. Now, we need to restart that direction. But over and above this will also give us, as a multiplier, stability in the economy. We have the stability in terms of stability in the exchange rate, in inflation, but we now need to guarantee that by economic transformation, industrial transformation, we need to produce for us to be able to eliminate the US dollar and remain with our local currency ZIG as we move towards the target of upper middle income status
by 2030.
By 2030.
Now, as this is the inaugural edition of ZICE, what key performance indicators should stakeholders monitor to assess whether the conference translates into meaningful industrial growth, investment inflows, and economic value chains? We touched on it a little bit, but now you can expand on it, especially on the key performance indicators.
So jobs are very important because we have youth who are unemployed, and it's no-brainer. But in my view, we want to see Zimbabwe reclaiming its position in terms of exports of value-added goods. So the first key is to have a transformational shift as we proceed, not overnight, from export which are denominated in raw materials. We're talking about 92%. So we now need to have that dilution as number one. Number two, obviously, we need to see new investments coming in into the country. There's a discussion which is very thorough on artificial intelligence and technological advancement.
Are you going to be touching on that at the
ZICE? Yes.
Because so it's now critical. AI is now
very critical. We're actually going to have artificial intelligence and technological advancement, even in our study of the state of the industry. Right. So those are some of the areas which we want to see Zimbabwe upgrading itself to producing commodities which are value added. But also it's very important for us to see ourselves also diversifying exports. Our exports is largely concentrated in Dubai, United Emirates.
Yes.
53% of our total exports are now going to Dubai, not South Africa. Yes, South Africa is now 30%, right?
It's reduced.
It's reduced. So you will see that Dubai, 95% of exports is gold.
Yes, that's true.
Yeah, and 5% is tobacco. South Africa is minerals, a few minerals, and also tobacco. So this is an imbalanced structure of our exports.
Yes.
So when out of this meeting, we are supposed to have resolutions, which will run between now and the next meeting again next year. And it will have log frame, monitoring evaluations, and key indicators, job creation, exports, and how SMEs have been mainstreamed. Transition, just transition, and inclusive development.
Yes, that is important.
It's not going to be big companies alone. It has to be inclusive.
Yes, SMEs, private players,
young people, women.
It's going to be inclusive. Now, that's That's a lot that you've unpacked for us. We need to have a follow-up after the event so that we discuss as to what was actually discussed in the event. But that was Professor Gift Mugano. Prof, it was a pleasure having you on the show.
It's my pleasure. Thanks so much for having me.
And now that concludes the show for us here on World of Business. From the crew behind the scenes and myself, Tafara Bendaguta, it's back to business.
ZBC News, the real African voice.